Hello and welcome back. The most famous dialogue of our society is taxpayers' money is getting wasted in so and so area or for so and so reason. And we know that taxpayer is a person who pays tax to the government on his earnings. If you are a taxpayer, then you must be filing your income tax returns as well. But did you know that there are many common mistakes which most of us make in the process of our filing of income tax return? In case you didn't, then in this video, I, T. Ravi Saurabh, will help you in identifying the 5 most common mistakes of taxpayers. So, let's begin. For simple and basic understanding, I have classified the mistakes of taxpayers under the following 5 categories, which are mistakes made under the classification of heads of income, mistakes made in claiming of deductions, mistakes made in claiming of TDS, mistakes made while filling of ITR forms, and last but not the least, mistakes made with regard to filing of income tax return. Let us first understand the most common mistakes made by taxpayers with regard to classification of heads of income. The most common mistake is wrong classification of heads of income by the taxpayer. That is, when a person shows income earned under one head in any other head. For example, rent income from property is shown as income from other sources. If you own any house property and earn any rent from the same, then you should show the income under income from house property. Here, you can claim deductions available under the respective head and reduce your taxable income. The next common mistake is not disclosing any income. This is a blunder and you should always avoid. For example, income from share trading transactions are not disclosed in the IT return. Another common mistake is not showing income on accrued basis. For example, interest received on FD is not shown as part of the income of that financial year. Rather, it is shown as an income only when the FD is matured. This is the most common mistake that any taxpayer does. Please avoid this mistake and take proper statement from the bank to show the interest income correctly. Next common mistake is showing net income instead of full income. This happens when tax is deducted at source and the taxpayer shows net income received in bank instead of the gross income. For example, interest income received after TDS is shown as net interest income only. Another common mistake is not showing exempt incomes like interest on PPF or dividend income which was exempt till FY20. One must show this income under the head exempt incomes. Now let us examine the mistakes of taxpayers while claiming deductions. Deductions are available as a tax saving tool which most of the taxpayers avail. However, the common mistakes which one makes while claiming deductions are not claiming full deduction. This happens when a deduction is available but the taxpayer misses out on claiming the same. For example, deduction up to Rs 10,000 is available to any taxpayer below 60 years under Section 80 TTA on interest earned in savings account and to senior citizens up to Rs 50,000 under Section 80 TTB on any interest earned from deposits in bank or post office, but the taxpayer misses out on claiming full deduction under this head and ends up paying more taxes. To know more about deductions under Section 80 TTA and 80 TTB, please watch my video on the subject, the link of which is given in the description box below. Or you can click the I button on the top right hand corner of your screen and watch the video. Next mistake is claiming more deduction than eligible. For example, while most of us know that premium paid for life insurance is available as a deduction under Section 80C, but most of us do not know the extent to which it can be claimed. For claiming the same, certain conditions need to be fulfilled. Another common mistake is claiming wrong deductions, like expenses made towards payment of school fees of a child is available and limited only to the extent of tuition fees payable. This does not include any amount paid towards annual fees or fees paid towards transport charges. But people claim the full amount paid to the school, which is wrong, and one must correct this. Next common mistake is claiming ineligible deduction. For example, any donations made to anyone is not available as a deduction under Section 80G. To claim deduction under Section 80G, donations needs to qualify the test of Section 80G conditions. The next most common mistake is not to take full advantage of the total deduction limits available. For example, even though the limit of Rs 1,50,000 is available under Section 80C, people do not invest that much to take the advantage of tax deduction. Now let us explore the mistakes of taxpayers while claiming of TDS. Claiming of TDS is a very important aspect of income tax return filing process. One must take full precautions in claiming of TDS. For that, one needs to check the TDS details in Form 26AS and then fill it in the IT return form. To know how to check TDS online in Form 26AS, please see my video on the subject. The link of the video is given in the description box below. You can also click the I button on top right hand corner of the screen to watch the video. While claiming TDS, most common mistakes which a taxpayer does is claiming wrong TDS. For example, if any party has deducted any amount from the bill, the taxpayer assumes it to be TDS and claims it without verifying the Form 26AS. Next common mistake is not claiming of any TDS. This usually happens when most of salaried people who have deposited their money in fixed deposit banks do not take a notice of the fact that bank has deducted tax on the interest paid during the financial year. Hence, it is very important to check 26AS form beforehand. The next common mistake is claiming more TDS by taxpayer beyond what is reflected in 26AS. Another common mistake is claiming TDS of someone else. This happens when a deductor has wrongly filed his TDS return and shown the tax deducted of the taxpayer instead of some other taxpayer. In such a situation, one should refrain from claiming this TDS as the deductor might any day rectify his mistake in TDS return, which will result in removal of the TDS appearing in the Form 26AS of the taxpayer. Another most common mistake is not paying advance taxes. This happens when the taxpayer does not deposit advance tax as per the due date specified. This results in paying of penalty in the form of extra interest under Section 234B and 234C of the Income Tax Act. Now let us take into account the mistakes of taxpayers with regard to filling of income tax return forms. The first and the foremost common mistake which anyone does is to select the wrong ITR form. This happens when a person does not take into considerations the point mentioned on the applicability of relevant ITR forms. The next common mistake is filling up of wrong data in the ITR form. For example, keying in wrong inputs in various fields, say address or Aadhaar or any other field for that matter. The next common mistake is disclosing wrong entries in wrong heads. For example, exempt incomes being shown as income from other sources or speculation income being shown as income from capital gains. To know more about income from capital gains, please watch my video on the subject. The link of the video is given in the description box below. You can also click the I button on the top right hand corner of your screen to watch the video. The next common and most purposeful mistake which a taxpayer does is not disclosing all the bank's accounts in the ITR. For example, showing only one or two bank accounts and hiding information on the other bank accounts. Please disclose all your bank accounts, whether it is savings or current account which is linked to your PAN. Another common mistake is entering wrong bank account details. For example, keying in a wrong bank account number. Here, utmost care must be taken to key in all the data of bank account, otherwise, in case of a refund, the same will get delayed. Now let us consider the mistakes of taxpayer with regard to filing of income tax return. With regard to income tax filing, the most common mistake or blunder which one does is not filing IT return at all. This generally happens when a person's income is below taxable limit or when a salaried person thinks that deduction of tax by the company is sufficient enough and no further action is required. In this regard, my suggestion is to file your income tax returns irrespective of the fact whether you are within taxable limit or not. This will also help in case if you are looking for a loan, because one of the main documents required for loan processing is your IT return. The next common mistake that any taxpayer does is late filing of IT returns, which means you are not filing tax returns within the due dates prescribed under the Income Tax Act. In this regard, please note that if you delay in filing of tax returns, within the due date, then you are liable to pay a penalty in the form of interest under Section 234A, and if delay is beyond a certain extent, then the penalty is also applicable in the form of fee payable under Section 234F. Another most common mistake which the taxpayer does is not submitting the ITR 5 to CPC Bangalore. Once you upload the return, the next step is to download Form ITR 5 and mail the copy to CPC Bangalore. To avoid this, you can also e-verify your return online. The next common mistake is not responding to mails from CPC Bangalore. For example, if there is any lacuna in the IT return file, then the CPC will inform the taxpayer to rectify the mistake. One must ensure that the said mistakes are rectified within the time frame. Last but not the least, the biggest mistake a taxpayer makes is not seeking professional or expert advice on income tax matters. One shies away from taking professional help because of the cost involved. But one must also remember that no lunch is for free, and one must take professional guidance in matters beyond one's capabilities. I hope after watching this video, you have a good understanding of the 5 mistakes of any taxpayer, and you will learn not to do the same. If you found this video useful to you, then please like the video and share it with your family, friends and colleagues. Further, if you have not yet subscribed to my channel, then please do it now. Also, do not forget to hit the bell icon next to the subscribe button so that you can receive notifications of all my future videos. Thank you for taking out time to watch my video.